Hi, in the short 3 minutes I have, I'll be explaining the accounting concept of the bank reconciliation. Firstly, we'll deal with the definition before examining some key terminology required to understand a bank reconciliation. Then we'll look at a problem and solution before finishing up with some journal entries for the company. So what is a bank reconciliation? Well, it's the process of matching the balance of an entity's cash account to the corresponding information on a bank statement. The goal is to ascertain the differences and to book changes as appropriate. And why do businesses deposit their money into a bank? Well, it aids in internal control as banks provide a level of physical security. They also provide a source of independence for a business, and this independence can identify fraudulent behaviour. Now some vital definitions. Firstly, a deposit in transit. This is a deposit made by the company which is yet to clear the bank as of the statement date. An outstanding cheque is a cheque that has been distributed by the company and has not cleared the bank. This is because of timing differences between the preparation of a company's books and a bank statement. Furthermore, a debit memorandum is any addition to the cash balance on a bank statement, such as interest received, while a credit memorandum is any subtraction, a service fee for example. A dishonoured cheque is a cheque that has been banked, however insufficient funds in the drawer's account prohibits the transaction. In the next minute, we'll be answering the following problem. However, before we start, we need to consider what the bank statement is, what our cash account is, and any other information that will help us answer the question. Our first step is to reconcile the bank statement. We record our balance per bank statement before adding our deposits in transit and deducting outstanding cheques. This will provide us with our actual cash balance. The outstanding cheques and deposits in transit were ascertained by simply cross-checking both statements and identifying transactions in the company records not recorded in the bank statement. Next, we reconcile the company books. Firstly, we record our balance per company records by adding the left-hand side of the cash account and deducting the right-hand side. We then add the receivable and deduct the service fee charge and error to arrive at the actual cash balance. Noting the title, our completed bank reconciliation is listed below. When both actual cash balances are equal, it makes for a very happy accountant. Finally, the preparation of journal entries. It is important to understand that we adjust our company's books to the actual cash balance because as accountants we are only responsible for our own business. Firstly, for the receivable, we debit cash and credit accounts receivable $100, and for the correction of the error, we debit accounts payable and credit cash $360. For the monthly service charge, we debit service charge expense and credit cash $130. As a side note, the entry for an NSF is shown below and is a commonly used account for other bank reconciliation problems.